Hello everyone, welcome back. I got some really good ones for you today on this Friday, March 27th, 2026. A lot's been going on with those markets and geopolitics. That's what we're going to be focused on for today's video. So welcome back. Glad you made it. Glad we could hang out together. And let's dive right into these markets, shall we? So we have the 10-year yield in the bond market hanging out at 4.41%. Taking a look at that bond market. Rising yields, guys. In the video I did a couple weeks ago, the last video, I kind of flipped bearish on the stock market. Looks like we're vindicated. So, you know, woohoo. Not to toot my own horn, but beat, you know what I mean? First time in the channel's history I flipped bearish on the stock market, and that looks to be playing out quite nicely. So we're dealing with rising yields. That 10-year yield at 4.41% right now. If that pops above 4.5% in the coming trading days, then look out below for the three major stock indices. So if you're bullish on the stock market, you're looking for those yields to actually back off. You're looking for the 10-year yield to come down. And if you're bearish on the stock market, you're looking for those yields to continue climbing. And that's kind of my base case, guys. So I became bearish in the last video, and I kind of remained bearish short term. Mid to long term, still bullish on the stock market. We'll get to stocks in a moment. So we have the 10-year yield hanging out at 4.41% right now. Not good, entering the danger zone for the stock market. We also have the DXY, that dollar chart, that Dixie, hanging out at about 100 right now. So the DXY has been moving up a little bit, but nothing crazy, guys, nothing to write home about. Keep an eye on that DXY. If you're bullish, things like stocks, crypto, gold, then you want to see that DXY back off into the double digits again. Maybe trade between like 85 and 99, somewhere in there. Otherwise, the DXY will keep climbing above 100, and then, you know, look out below for the three major stock indices. But I don't think, guys, the dollar's going to get too much stronger here. A lot of headwinds for dollar strength regarding, like, you know, how much money we're going to need to print to fund this World War III popping off. And so, you know, we're just going to have to see where all that goes. But I do, base case, mid to long term, debts and deficits are going to continue to explode, and I think we're going to see more dollar weakness. But for right now, dollar's moving up. That is putting a little bit of downward pressure on the three major stock indices. We also have crude oil, the star of the show right now, back at about 100 a barrel. Every day above 100 is kind of a bad day for the three major stock indices. So the reason I flipped bearish on the stock market a couple weeks ago and remain bearish would be if the peace narrative keeps failing, we continue to climb the escalation ladder. There's more and more institutional inertia, more and more troops sent over. I think that's bad for the markets short term. Oil continues to climb. That would be bad for the market short term. And that 10-year yield continues to climb. That would be bad for the three major stock indices short term. So those are kind of the three things you'll be looking for. If the peace narrative comes together and there is a real de-escalation in the Middle East, and then the Strait of Hormuz opens and the market actually buys that, then I could see the stock market begin to move higher. Maybe the correction's over, but my base case is that that's not what's going to happen. You know, I'm only like 30% sure that that's going to happen in the coming weeks and months, and I'm more like 70% sure we're going to keep ramping things up. You know, we had talked about it in the last video. Carg Island, 2,500 Marines were on their way there. Now we're looking at, you know, 3,000, 6,000, 10,000, 20,000 troops in theater. You see where this is going, guys. Not good. I believe it is in the country's best interest, the United States, to go and call this a victory and get out of there. Like, just come on home, man. You know, Trump supporters were really looking for like cheap gas and no new foreign wars. So how's this $5 gas and World War III thing looking, you know? In Iran, this is a different animal, guys. It's like Iraq times 5. But we'll talk a little bit more about geopolitics in a little bit. So we have the Dow Jones at 45,457, moving lower in my opinion. We have the S&P 500 at 6,409. I think a good point to buy the S&P 500 if this correction continues would be like 5,500 in the coming weeks and months. We'll see if we get there. NASDAQ at 21,000. Got gold right now at 45.42, so 4,500 per ounce. Still bullish gold on this channel, guys. Nothing's really changed there. Silver at $70, up nicely today, but suffered like a 40% retracement from its all-time recent highs. So we'll see if we take the next leg higher, and that's kind of what I'm leaning towards, guys. I do remain mid to long term bullish on precious metals, crypto, stocks. You kind of get the idea. Short term though, a little bit bearish stocks, all right? But I still like precious metals, I still like gold and silver, I still like crypto. We got Bitcoin right now hanging out at 65,945. You know, I say buy the dips, guys, but I always say buy the dips. So I'm going to be pretty much, I'm a perma bull on Bitcoin, okay? There's only 21 million of them, guys. Like, the vast majority of the Bitcoin that could have been mined has already been mined. So we're not going to see a whole lot of new Bitcoin coming to market. And more fake dollars are going to keep chasing that absolute scarcity in Bitcoin. Bitcoin's very scarce and very deflationary, guys, because not only is pretty much like only 1 or 2 million left to be mined, and that's going to happen over the next like 50, 150 years. But we also have like people, you know, lose wallets, that kind of thing. So very deflationary. I love the protocol, guys. Study that protocol. If you think Bitcoin's going to zero, you still don't get it. I hope you figure it out. But hey, throw trash at me when I'm wrong. Ethereum down to 1985, so pretty cheap. Not big fans of Ethereum on this channel. We do like Solana though, and Solana's only $83 per coin right now, so tentatively bullish on Solana here. Maybe, you know, my plan, guys, is to have like 50 of those things, and that'll be for the riverboat gambling trips when I'm retired or something like that. But I still think Solana could hit $1,000. It's like the number 7 crypto. Take a look at it. If you don't like Solana, you can look at XRP, Cardano, BNB, you know, something like that. I also like Pepe for meme coins, Pepe for the Ethereum network. I like Pepe more than Ethereum though. You know, got about 1 billion of those, full disclosure. And then my favorite meme coin on Solana would be Retardio, and I got over 1 million of those. So I'm holding like 1/1000th of the Retardio network right now. You know, it's a kamikaze mission, but highly speculative. Don't buy Retardio with money you can't afford to lose. That goes without saying. But, you know, the tip is sticky, cousins. Very bullish Retardio. Stay bricked up. Let's ride the lightning. Retardio, you know, might retire your bloodline. We'll just have to see. Also, like the Retardio cousins, the NFTs, you can get them for like $100 right now. So buying maybe some Retardio cousins, who knows, guys. But that's just funny money, you know what I mean? But yeah, that's a quick rundown of the markets right now. Kind of talked about yields, the dollar, energy, the 3 major stock indices, this correction we're in, metals, crypto. Getting a little bit more nuanced. We also have a jobs report that'll come out a week from today, guys, so April 3rd. You'll want to be keeping an eye on that jobs report. I think analyst consensus is 125,000 jobs added, but we're just going to have to see. If we come in hot, though, like way above analyst expectations, like let's say the market's expecting an add of 125,000 jobs next week for March, and then we end up with like 200,000, that would actually be bearish. And it'd be hawkish for the Fed and it'd be bearish for markets. The reason for that is Fed's already pushing off rate cuts, guys. We'll talk about rate cuts in a minute. Fed's already been pushing off these interest rate cuts. So if we come in stronger than expected on jobs, I'd actually expect those rate cuts to get pushed off even further. That would send rates and yields a little bit higher potentially, and stocks actually lower. So if you're bullish on the stock market, you actually want a weak jobs number next week. You want to see below 125,000 jobs added. So maybe we'll get like 50,000, only 50. If something like that were to happen, then interest rate cuts would be back on the table for this year. And that would actually send bond yields lower, rates lower, dollar lower, stocks, crypto, gold higher. So we're just going to have to see how the jobs number plays out for next week. But that's something you're going to want to keep an eye on for April 3rd. Moving on to credibility issues, guys. So not only do we have some credibility issues with the Trump admin, the psyops, right, the changing the reasons we started World War III, all of that, guys, like the whole thing. The market's starting to kind of call BS on the psyops coming out of the Trump administration from the day-to-day basis. Like there's a credibility issue going on. There's also insider trading going on, guys. So earlier this week, probably somebody close to Trump, whether it's like Barron or Donald Trump Jr. or Jared Kushner or Steve Miller or Steve Bannon or Roger Stone or one of these swamp creatures that's pulling the strings behind the curtain for Trump, shorted oil, bet against oil prices with like $500 to $700 million. If few days ago, and then Trump tweets out, oh, the P stocks are going well, oil craters. They covered the short position, probably longed oil right after that. Then lo and behold, there were no P stocks. Oil shoots back up. They're selling into strength. So they're just kind of playing both sides of it with a lot of money, guys, $500 million. So this is the kind of insider trading that would make Nancy Pelosi blush. So this is the golden era of fraud and fake money printing, a wild orgy of fake money printing and lies and propaganda. But, you know, whatever. One of the reasons we've been bullish things like Bitcoin and gold for the last 4 years, but I digress. Something you might find interesting, dead internet. So new report reveals AI bots have taken over the internet and surpassed human traffic. Found that interesting. Non-human traffic is growing 8 times faster than human traffic. So guys, the whole idea behind the dead internet theory is like, which, you know, we're pushing back against that because I don't use AI in this video. It's like we just raw dog it, you know, one shot, one kill, come out here and give you guys the videos. I am a human. Hopefully you guys are human. I do interact with some of you guys in the comments. So we're the alive internet theory, but the whole dead internet theory is the idea that like bots are going to create content, post the content, bots are going to comment on the content, bots are going to reply to the content. And if there's like a human in there, like the human thinks this is all these people and, you know, people behind the keyboard and people behind the content, but they're going to find that it's pretty empty in there, and they're kind of the only one just hanging out with a bunch of bots. That's kind of the dead internet routine, the dead internet theory. And we are seeing it on things like Twitter, guys. It's ridiculous. Half the stuff on there is AI, a bunch of AI fake videos. You know, it's out of control. So keep an eye on that dead internet theory. We'll see how it plays out. But still bullish. Mega cap tech, you guys. Little side note there. Boots on the ground, guys. So in the last video, we were talking about Carg Island. We were a bit ahead of the curve on that, talking about the Marines going over there. Talked about my time in the Marine Corps. And it looks like, you know, we had 2,500 on the way over there. A couple battalions on an amphibious assault ship. You know, it's like a mini aircraft carrier that has a bunch of rotary wing on it, no fixed wing. I was on the USS Essex. I was also on the USS Germantown when I went from like Japan to Korea way back in the day. So you can go ahead and Google USS Essex or USS Germantown. I've been on those things. So, you know, they're on a ship like that, right, with some, you know, fast attack subs or destroyers or Nimitz-class carriers escorting them. But, guys, we're, you know, institutional inertia, right? Like, once these wars get going, once the gears get lubed over there at the Pentagon and the money starts flowing, they get out ahead of themselves. You start seeing, you know, mission creep. So let's discuss it. So we had 2,500 Marines on their way over there a couple weeks ago. Now it's like, you know, it's looking like soon we're going to have 5,000 troops in theater, then 10, then 20, kind of see where this is going. I don't think we're going to invade the mainland. I don't think we're going to like try to do a neocon nation sandbox building like we did with Iraq and Afghanistan. But I do think we're going to be taking some of these islands in the Hormuz Strait. Once we take those islands to kind of open things back up, Iran's going to start shooting missiles at those islands. And then mission creep's going to kick in, and we're going to need to take some of those areas like along the coastline, secure those as well. So it looks like we're just kind of cutting off a sliver of Iran, and we're just going to kind of try to slide it over to our side, guys. That's kind of how I see this playing out. But it could be a total bloodbath because, you know, we're hearing a lot about the Iranian missiles, which is like a whole branch of their military. But what about their 1 million man ground force, infantry? You know, they've got an army that's like 1 million strong, 750,000 to 1 million strong. We could be in a situation where the Marines go to take some of these islands and, you know, they're not going to be shooting at them from the coastline with AK-47s, guys. I think they're going to let them come in real close, get them into the kill zone, pop out of all these like tunnel networks they built, and then, you know, unload at them at like 200 meters kind of thing, like bring them in real close. We would have air on station though. The A-10s would be ripping them apart. You know, we'd be dropping J-dams and the A-10's Burt gun, that Gatling gun on it. Go ahead and type in on YouTube A-10 shooting. It's like, because it's a Gatling gun, guys, of like 30 or 40 millimeter grenades, essentially. So it's a Gatling gun, shooting grenades. It's pretty insane. Yeah. So it could be a bloodbath. I do think, though, tactically we would win. You know, it's not like toe-to-toe Iran's going to beat us, but strategically, like what becomes of all this, it's anyone's guess, guys. And as of right now, we're 30 days into this war, and the Strait of Hormuz is still contested territory. So, you know, it's not looking too good, guys. So the reason I remain bearish on the stock market short-term is if energy prices keep rising, 10-year yield keeps rising, peace narrative continues to fall apart, Hormuz Strait remains contested, get a strong jobs number next week, that would all be pretty bearish for these markets, guys. Dollar continues to rise. Just kind of put it all together, guys. The three major stock indices, crypto, gold, they don't want to see rising yields, rising dollar, rising interest rates, rising tensions. These high energy prices, guys. Larry Fink, the CEO of BlackRock, he's already warning that it could cause a global recession if crude stays at about 150 a barrel. So every day above 100 a barrel for crude is like a bad day for the rest of the markets, guys. Now, we were bullish on energy stocks on this channel, though, going back the last couple years. And, I remember bringing up Exxon to you guys at like 109 a share. So we are clicking our heels to the bank on energy, gold, but it's a bit of a double-edged sword, guys, because look over at that NASDAQ or that crypto. It's like, we're in kind of a risk-off environment right now. Things are not on a stable footing, Stock market's also trading on pretty low volume, guys. That's a pretty bad sign. So go ahead and bring up the S&P 500. Go ahead and take a look at those volume bars. They're kind of tiny. That's not good. We have had these intermittent 1-2% pops in the stock market over the last few weeks or so, but every rip has gotten faded. Sellers piled back in, shorts piled back in. It was just short covering, guys. Whenever you have those tiny pops, that was just a little bit of short covering. Now, if the 10-year yield continues to rise and these markets continue to buckle, that could cause a lot of margin calls to trickle through the market, and that could put some downward pressure on things like precious metals or crypto, because people just need cash to cover margin. But that's fake, guys. I would say just buy the dips on crypto, buy the dips on precious metals, buy the dips on the stock market. Maybe 5,500 is a good target to shoot for the S&P 500. Remain long and strong on those energy stocks, and we'll just continue to monitor the situation, you guys. But bring a barf bag, okay? It's diabolical, all right? I believe in adequate defense of the coastline and nothing more. Not a big fan of Trump and his administration. Wasn't a big fan of Biden and his administration, though. So I don't wear your red hat or your blue hat or whatever. I'm just going to come out here, guys, talk about how the beast system is going to continue to feed, whether on perpetual war, me to the middle class. It'll operate in a perpetual vacuum, taking us crisis to crisis to crisis. Like, that's going to be the narrative I'm going to be more or less pushing. You guys know me. But this channel isn't about politics. It's about winning, guys, and I want you to win. This channel's for winners. With that being said, though, take everything I say with a grain of salt, guys. I'm not a licensed fiduciary. None of this is buy or sell recommendations. But, hey, check the receipts, guys. Check the scorecards. This channel has done very well, and I look to continue to stay out ahead of things for you guys. So hope this video finds you doing well. I hope you have a wonderful weekend. Like, subscribe, comment, share, whatever. You guys are awesome. And just keep going, all right? I know gas is getting up there. I know things are really weird right now, but hunker down, and we're just going to keep going, all right? Thanks for hanging out with me. Till next time.